Thank you for that optimism. I hope it does turn out to be a non-graveyard session. First of all, I'd like to welcome all the panelists. So, Sean, Avni, Mr. Mahindran, and obviously Giriraj, welcome to the panel. Before we start off, I think we've had some really good panels today, and there may be some of the themes that you all have picked up on as well. Ours is slightly different from the, some of the things we spoke about this morning about the opportunities, valuation. We spoke about distribution. Ours is about some of the, if you're a young kid, it's about the pains of growing. We all want our kids to grow up and be healthy and strong. But I think this panel is very interesting. We do a lot of work at Alvarez and Marsal, where we work with firms to help them achieve more efficient scale-ups and growth. But one of the things that is interesting, and I was talking to some of you just before we started, maybe 4 or 5 years ago, growth was everything. We heard all about, both on the online, we talked about businesses scaling up. India was meant to be a growth story. Last couple of years, I'd say 2 or 3 years, you've started to hear more about profitable growth. We'd like to grow in the right way, as things have picked up. And so this is really about, how do you grow efficiently? Because I think all of us expect businesses to be successful, to grow. That theme continues in India. So how do you do it efficiently? So I think just to kind of kick us off for the session, maybe I can ask you guys to talk about your experiences in managing growth efficiently, and maybe what you do, if you could introduce yourself, and how you see this challenge on a daily basis. And Avni, maybe you can kick us off.
Thank you for having me over. It's a pleasure to interact with the panel and some of the participants here. I'm leading Godrej Nature's Basket, which is the retail arm for Godrej Industries. And I started my journey about 2 years back with them. Prior to that, I was working with Tata's and was leading the Starbucks venture here. I think you struck a chord when you spoke about sustainable or profitable growth. And when I took up this assignment, I really looked at it as a personal challenge to see how moving from a very high-end margin retail business to the different kind of a spectrum, because in grocery retail, the margins are not very high. How do you build a business which is going to be sustainable and yet delivers on growth? So a little bit about where Nature's Basket is today and where I started my journey with it. I think in terms of growth, you're right. 4 or 5 years back, people spoke about 30% CAGR. We want to grow, we want to scale up, and we want to do it very quickly. But I think when you look at the fundamentals of any business, whether it's retail or CPG, I think it's a myth driven by a lot of greed, and I think all of us participate in it as investors or as business people to try and build very glamorous businesses based on not so sound fundamentals. So if I speak about retail, and if you look at international best practices, whether it's Starbucks or it's H&M or any other great brand which is in the top 5 today, or IKEA, I think the fundamentals of retail are really very simple, that if your store is going to be cash profitable within X months and not even X years, whether you're in grocery, you're in a cafe, or you're in apparel, I think that is required. And that's how retail is built block by block. I think there are a few great examples where scale on low margin deliver great models, but I don't think that India is really right for it. I think we're still in the search for a Walmart of India today, and a lot of economic value gets created by wrong fundamentals of business, and that's when you have to really transform it. So that's when I stepped into Nature's Basket, when the family and the promoters were really asking us that, how do you scale up this business in a very meaningful way? And meaningful is clearly defined as very high growth rates, but with profitability. So our journey has been interesting. I think we've seen very challenging times, taken a few tough decisions, and maybe we can speak about that as we continue the session. But so far it's been great. I think when you focus on the right fundamentals, you're not just able to grow the business in the right way, but you're also able to empower and lead a very motivated team. So that's been my short experience here, and would love to hear from the other panelists as well.
Great. Mr. Mahindran, I would never thought I'd say this, but you have started up, and you almost fall under the startup category, but you've seen the other side as well. Maybe you can give us some of your views.
Thank you, Amit. Just to introduce My background, I'm in the FMCG business, and for the last 25, 30 years. I've started a brand called Goodnight, and then I sold it to Godrej, and converted it to a multinational to Godrej Sarali, then ran it for 15 years, and then merged it with Godrej Consumer Products, and ran that for 3 years, and now moved out. Right now, I've been backed by Goldman Sachs and Mitsui, Japan. They are the major investors. So after running for 25 years, when we started a category like household insecticide, one has to know how a category has been built in India. And as all of you all know, that India is an emerging market. And so this topic of efficiency of cash management as well as growth, and then I heard Amit saying, now the trend is profitable growth, whereas 5 years back, the growth at that time, they were not insisting for profitability at that point of time. That's what I heard from you. Am I right in my understanding? Now, I would say that it is even today, they are not looking for a profitability in growth. They're looking for growth even today. All the large investors in India, because I'm dealing with Goldman Sachs and other funds. But what they are looking for is predictability of the growth. That is where we go wrong here. And I don't think India has moved to a stage where everybody demands profitability growth, profitable growth. I was running the company Goodnight for more than 20 years, 25 years. Every year we have posted profit. I had shareholders like Sara Lee or Godrej family, and they do demand profit, the multinational as well as the Indian family office. So we were posting Goodnight as a brand. I was always posting the profit, what do you call the expected profit. And the shareholders were happy for 20 years. And then when I looked at where the category is, and the category means per capita consumption of the category, household insecticide, we are doing about 6,000 crore consumption in India. So about 4 or 5 years back, I went to Indonesia, acquired a business for Godrej Consumer Product. It's an insecticide business. And so there we went into the details. How an emerging market like Indonesia, what's the size of the household insecticide there? And when we come to India, we are half of Indonesia consumption. Whereas the population-wise, India is 5 times of Indonesia, but we are half. So then I reflected myself, and then why did we are doing so much per capita consumption so low in India when compared to even a country like Indonesia? It is that approach of profitable growth. Now the profitable growth obsession leads to consumption slower and the category growth slower in an emerging market like us. And you know the per capita income where we are, and our GDP growth, which is at average 7%. One should look at how fast you can grow. And I don't think even today the investors are looking for profitable growth. They are looking for growth, but predictable growth. That's where we are. Thank you.
Godrej, maybe you can.
Hi, everyone. First of all, thanks for inviting me for this panel today. More importantly, giving me a throne to occupy where I can kind of, put my arm as if I am an emperor. So I really feel happy about that. Just to introduce myself, I spent my 25 years of work life in the FMCG business, about 10 years with Colgate-Palmolive, 10 years with ITC, 8 years with Colgate-Palmolive, about 4 years with Castrol. Currently, I'm with the Raymond Group, and I helm their FMCG businesses, which is spread across 2 companies, J.K. Helen Curtis and J.K. Ansell. And I have been fortunate to have seen both sides, seen large, mature MNC businesses, and how growth is a paradigm which bedevils them. At the same time, large Indian corporations like ITC, which have incubated phenomenal set of categories and driven growth there, to a situation now where legacy businesses which have been around for a while have been suffering from lack of growth. And it's my considered view that it's really not a question of profit or growth. It's a question of life stage of a corporation. The second most important thing really is the question of profitable growth arises when growth itself is not visible. As long as you are delivering growth which is equal to or ahead of stakeholder expectation, the profit question usually can wait. Because everybody in the business knows that if you want to squeeze out profits, it's just a question of sacrificing growth for a year or two, because you will get into optimization, cost rationalization mode. So generating profits out of business is not necessarily very challenging. It is delivering the barn-burning growth which most of us want to deliver, especially when it comes to investment. And there are few patient investors like ITC, for example. It's probably built the largest startup story in the consumption space in this country, where in the last 15 years it's built a 10,000 crore business from scratch in the foods and personal care categories. And every business has been treated like a startup business. So it's not a question of growth versus profitability. It's just a question where you are as a corporation or as an organization, as a startup. What kind of tailwinds or headwinds are you dealing with? Because strategy, for example, is something which is a bandied word, and there are enough of us and more who can craft strategies. It is really being able to convert what you intend into reality. And my biggest learning in that journey really has been, it's actually, a lot of us bandy about, people and leadership. But I think the critical difference between success and failure for startups or for any business that matter is the kind of talent that you have and the kind of leadership that you provide. If you have the right talent and you provide the right leadership, growth or profitability will never be at collision to each other. It will always be something which will work in tandem, and you can choose to accelerate one over the other at a particular point in time.
Thanks. We also have Sean Sovak. Sean, you bring a very different perspective being an investor, but you invest in a lot of business. I'd love to get your perspective.
I do come from a bit of a different background. I'm with a firm called Lighthouse. We are a growth equity investor, primarily focused on the consumer, facing companies or consumer brands, and our mission is to help entrepreneurs to dream, dare, scale, and care. And I guess with that mission sort of comes the willingness to spend a little bit more than focus on profitable growth. But at the end of the day, a couple takeaways from my experience at Lighthouse is at the end of the day, the end goal is not to be a busy fool. You want to have sort of a profitable product offering. And it varies. I know there's some entrepreneurs, amazing entrepreneurs in the audience, and it depends. You can't apply sort of what ITC rules of thumb are or experiences have been versus where you are. Because if you are emerging as a brand or a FMCG product company, you're going to have to put some money into the ground, whether it's branding or working capital, and it's hard to figure out where to do it or not to do it. But the common theme I'll put out there, so there's no rule of thumb, no right and wrong, but even our larger companies, we have some companies with 1,000 crore of turnover, we've backed them as small as 9 crore of turnover, is to experiment. So it's to figure out what profitable growth is going to create profitable growth, you have to experiment. And so suffer a little bit in margins, because there really shouldn't be a mature brand in India. At this point, you should not have a mature product portfolio. You should not have a mature brand. There's so much growth from India 3 to India 2 to India 2 to India 1. Our mantra with companies is to experiment, learn, and then scale.
So let's start off with the first part of the topic, which is on a more positive note, which is around achieving scale. Mr. Raymond, you gave us the example of Indonesia, etc. So tell us some about, now you've taken this business. I think it has both the insecticide category, also chocolates. What are some of your learnings about how do you scale up businesses quickly in India? What's been your perspective on it?
The scale-up challenges in India are... as you know, that India is the only country in the world where the retail universe, we have as high as 7 to 8 million general trade retail universe. I don't think any country in the world has that retail universe. When I checked what's the retail universe in China, China is half of the Indian retail universe. While the business and consumption, China is far ahead of India, but the throughput from a retail universe, China is half of India. Okay? Now, so the challenge is the retail universe, what we have in India, and penetrating the retailers in India is a big challenge. While I have been penetrating the retailers for the last 25, 30 years, taking a brand of Goodnight and a category as also on the success side. But then at that point of time, there was no pressure for me as an entrepreneur, what we call a natural startup. So you did what you can. But today, in the last 4 years, Amit, what I'm facing is when you bring in a large private equity fund to put the money, and you have your business plans, and you give your plans, and then you go into the market and try to penetrate in the retail universe, there are a lot of challenges happening. We call that as a challenge, but to my mind, we have a plan, we have a team, we have an investment of advertising and promotion, but does it happen as per that in terms of the retail universe? No. The answer is no. So the acceptability of the retailers and how do you nurture the retailers to accept your brand, and that's one part. Of course, that has got the flip side is the offtake of the consumer offtake is another part. But for the moment, I'm not getting any offtake issue, but my challenge is at the penetration level, which is the universe is so high, 8 to 9 million retail outlets are there. And how do you go to at least 1 million outlet in 3 years' time or 4 years' time? So there is a slowness. It is taking its own time. Now, if you crack that, then the top lines and the scale, everything happens. That's the challenge in FMCG, what I'm seeing right now.
And I guess a follow-on question from there, and I'm just going to pass it on to the different panelists, but so jump in here. But Godrej, I'll start with you. We have a lot of young entrepreneurs in the room today, and we heard some really good stories about how they're creating new categories. We heard about millennials and how they're very different in creating, completely new. When you think about growth and you're competing out there and achieving scale, how are you thinking in your categories about driving this? I mean, what are some of the learnings you think some of the younger companies can take away from your experience?
There are two types of growth stories that you can kind of create. One growth story is really where you are a follower. So a category is established, consumption is established, you're a late entrant into that category, and you really want to achieve scale, right? So that is one kind of growth story. The other kind of growth story really is that you have an idea which is really first to market, new to market in some form, and you want to really embellish yourself and embed yourself in driving that growth. And my experience has been that in both situations, either the situation is possible to really achieve barn-burning growth. There are 2 or 3 fundamental things that really have worked for me in terms of being able to attempt to drive growth, either if you're a late entrant or if you're an innovator. Fundamentally, it boils down to a couple of choices that you make in product market, what kind of consumer segment that you're addressing, what kind of product, what's your consumer value proposition that you're kind of trying to deliver. So if you're a late entrant into a market where there are a lot of established players, how do you compete? Why will you make a difference in a market which is festered with 50 players and find that sliver which is really yours to take and grow in a very, very significant fashion? I think it boils down to being able to make that little difference or that little need which has not been addressed by somebody. Either that, or trying to be able to talk about the addressal of that need in a fashion which nobody else had. In the categories that I currently deal with, one of the things that I've discovered is a brand called Fog, a competitor brand called Fog, established by Darshan Bhai, and he came into a market as a late entrant, but identified a pain point of consumers in terms of the value proposition which they were, and made a minor shift, and he's run away with the market, right? On the other hand, you can actually come into a market with a completely new idea, like a raw pressery, for example, which is cold pressed juices. Juices is one category that I dealt with when I was in ITC. And you can try and create a market there, but in these kind of ideas, the challenge really you have to identify in the Indian context is the scale up which you want. Where is the tipping point of that scale up? Building a 20, 30, 40, 50 crore business in a large country like India over a year or two's time is really not a challenge. Being able to build a business which is multiple of 100 crores over a few years, that's really where the challenge is. And in both these endeavors, whether it is a late entrant or a new entrant, the common thread that I have found really, it's got to do with the passion of the guy who is driving that idea. Right? If you are really, really passionate about something, you would find the path. Yeah, your passion will help you find the path. Develop a band of believers, people who will actually go with you on that journey. They are equally passionate with you. A team of passionate people is of far greater value than a team of capable people, right? Because the passionate people will find the way, the capable people will find the excuse for it not happening.
And Amit, can I just build on that? I mean, the advice I'd give quickly to entrepreneurs out there is both around time and building on what Godrej said around people. On the time front, the scarcest resource for the entrepreneurs out there is not capital. It's probably not ideas, it's your time. So very deliberately step aside for a few minutes and figure out what are the key things you need to focus on and focus on them relentlessly. If it's a B priority, you have to let someone else on the team, and things will fall through the cracks, but always stay razor focused on your A priorities. I loved, I believe it was Rohan from Epigami said he has 9 lakh stores he'd be going after, but yet he could just spend his time focusing on the Bombay stores and triple sales. He didn't say that, but I'll add that's probably true. That's a wonderful roti in terms of knowing where to focus, not necessarily go international with restaurants here or there. So think about your roti, return on time invested, and people just building on the passion. It's always hard to attract people. Biggest challenge I've had across my 20 consumer-facing companies is people. So bring your team along with you, invest with them. They'll be working hard, train them, give them learning opportunities, give people more responsibility than they deserve, let them fail, give them a little bit of rope, but get passionate people and then give them a little, really nurture them and train them. So those are my 2 things.
Great. Avni, you look at a very different side. I mean, Mr. Mahendran spoke about the challenges of, getting retail going and, penetrating the network. And as did, and Giri and Sean spoke about, how you drive these businesses. Now, you see 2 sides. One is you're in total control, you could argue, of your retail network. So you've got your own box. It's, I'm sure many people have tried Godrej Nature's Basket here. It's very unique. It's quite refreshing. It's different. It's premium. And you're trying to achieve scale in your own way. And right at the start, you said, you also start thinking about the balance. Your challenge, of course, is that all your stock is your stock. You're carrying it. And so, the scale, as you achieve this scale, you also have to come back to the theme about balancing capital and doing this efficiently. So how are you, you have a different set of challenges. How are you thinking about them as you scale up?
Sure. I think in retail, definitely apart from most people say that, retail is about getting real estate right, and real estate is very expensive in India, but it is also expensive in New York, Hong Kong, or any other leading metro. So I think if I leave that as aside, I think the fundamental for us is really getting the right product in, finding the right people who actually run our operations more efficiently. And the key thing in any retail is definitely the inventory. So supply chain and IT become really the backbone for our business. And I think making the right investments there is paramount before you think about scaling up. Because any business, whether it is FMCG or when you think about even retail, I think these 2 functions go hand in hand. And a lot of people think about IT or technology investments in terms of consumer facing. I think what is important in retail, at least that's been my learning, is that the internal customer is your employee, and there are a set of 1% of the organization's strength that have the luxury and the privilege of taking decisions, which is the leadership. And there are 99% who actually execute it. So how do you think about technology and inventory, as well as, when you manage these resources, you can really leverage it to not only drive efficient growth, but also empower the people who are taking these decisions. In terms of scaling up, you're right. I think for us, it's very important that we scale up in a meaningful and profitable way, as I mentioned. And the reality is, whether you look at retail in India or you look at it in China, I think the fundamentals of the business don't change, right? In any geography that you look at, whether it's a growing market or whether it's a developed market like the US. I'll give you an example of China, where Starbucks today is putting almost one store every day, or probably one store an hour today. I don't know the growth. It's about 2,000 stores. And Starbucks really invested in China for nearly 7 years, but with a very clear mandate that if your stores don't make money, all that growth and all that ramp up is useless, and your stores get impaired, not just by the auditors, but by the internal controls. And the same rule is applied to every market that you grow. And every time that Starbucks tried to do it the other way, that is, let's scale up and profitability will follow, they had to exit. Australia, they exited and they came back. Again, they exited and now they're back. Even UK, they struggled to get it. So I think whether it's a product, whether it's a retail idea, I think entrepreneurs should definitely pay homage and really sit down and understand what is the fundamental of the business. For us, in Nature's Basket, it's about managing our inventory, making sure our store experience is really superlative, so getting the right people, and using technology for driving the internal efficiencies as well as the consumer experience. So in my mind, I think that's the 2-bit that I can add to people who are here. I'm not from a product company, though we do have our own labels which are doing very well. And again, in own labels, I'll just share one learning that we have. We've seen a lot of companies, and some of them have associated with Nature's Basket for more than 2, 3, 4 years before my time. But every new product that comes into the market, and we know there are challenges like the co-panelists spoke about of penetration, but margins are very important. We've seen so many wonderful products die because they have less than, the typical 45, 50% margin that you need. And, this is generally a simple advice that we give to people who bounce off their product ideas with us, is that don't think that it's 30, 35% you're going to be able to make it. Even for our own label, we're fairly stringent and we follow that, just normal principle that you have to be able to afford the listing fees or the retailer margin that we would pay to any other for listing our products. So I think, again, the fundamentals have to be sound. Otherwise, like Giriraj said, you can build it up to 20, 50 crore, and beyond that, growth will really become unsustainable. So whether you're funded by a VC or if you get lucky by a larger PE, nobody is going to fund you till eternity because everybody has a cycle.
I mean, you've steered us to this question of capital, and I'll just open it up to all of you. Now, obviously, keeping profit out of it, capital is always limited. If there's unlimited capital, we could deploy it in many ways. So in your businesses, as you look at it, it's about finding this balance, because you have so many products to launch, whether you're Nature's Basket or your own product portfolio. How do you strike that balance? Because you also have to conserve working capital, cash, whether there are multi-channels available to you nowadays, or whether you go geographic or not. How do you do it? And any of you can kick off and give us your thoughts.
So I'll probably take off on that. I think it boils down to a simple question of prioritization and right to win. So the way at least I look at in my businesses in terms of multiple categories and multiple priorities and multiple opportunities, because everything looks like an opportunity. I mean, you just need to look around India and everything looks like an opportunity. The ability to convert that opportunity to reality is really where the challenge is. So when I really look at prioritization and deployment of capital as to how do you do capital allocation, it is really behind first determining where you have the best chances of winning, where your right to win exists the most. And being able to identify that's the complete science. All of us who've been in sales and marketing do it day in and day out for a living. But being able to identify where your right to win is and what your competitive strategy behind that right to win is going to be. Is it going to be product? Is it going to be brand? Is it going to be distribution? Is it going to be pricing? Is it going to be advertising? What is it that one thing that is going to convert your right to win into a reality? That's really what I do, and I say, okay, and is there some evidence? Most importantly, you can land at, from an analytical point of view, you can land at a right to win, but is there some evidence in your history, in the market, in the environment, which validates your hypothesis, yes, this is an area where I could potentially win, and therefore I should put my resources there. That's how really I look at capital allocation.
On the capital utilization, my view is that the adequacy of capital is important first, before we get into the efficiency of capital utilization. And most of the businesses in India, I would say they are undercapitalized, or the capital adequacy is a big question mark. And for whatever your objectives are, the objective can be set on a market share, on a category, on a geography. Whatever you set, you have to ensure adequacy. And that will be one of my concern. And I ensured that the adequacy is there when I started this business startup 4 years back. And that helps to achieve your objectives.
If I may just build on the point, when you're advertising, there is for those of who in the advertising business something called threshold, and the point of adequacy is extremely important, because if you are not at that threshold level of investment, that 10% less is actually going to make the 90% wasted, right? So being able to therefore identify the threshold which you really necessarily need to cross. If you don't have it within you to cross that threshold, don't even go that path.
And I mean, I'll just throw around, I'll come back to experimentation is how we help our companies think about growth, capital allocation, whether it's Bikaji going into Uttar Pradesh. We don't experiment by going something that could be fatal, like going in every district and across Uttar Pradesh and Bihar. Or if it's Kama, don't spend your whole year's advertising budget in 1 month. Experiment, see the response. It's okay to take a little bit of time. Fab India, if they're going to do a brand new marketing campaign, experiment in one sub-market where you can do the data set. But do experiment. And then when you have conviction, you've learned, you've tried again, then roll it out big. And you know that the profitability is there. So don't not do it. You'll lose a little bit of profitability, but do it in a way that it's not terminal.
And Avni, I guess in retail, this is more pronounced, right? Because you have to try new ideas all the time. Many of them don't work. I mean, how do you guys judge this? Because you have to almost autocorrect on a daily, weekly basis. How do you do it when you're striking this balance?
I think the one thing about retail is that you get your result the very next day. So you implement the idea and the first shift, and at the end of the second shift whether you've hit your target, whether it's really working, because the consumer walks in and, that's the moment of truth for us. I think in terms of capital allocation, I personally use a very simple principle. Like I said, that whatever I can dream up of a strategy and the intent, and I can analyze it, but ultimately I have to translate it so that a store manager can focus on it and deliver it at the point of sale or at the moment of truth. So the simple logic I use is that he can't focus on more than two things. And in different formats I've learned this, because the human brain at that level, given the variety of things that he's doing at the store, or even if you walk into a Starbucks store, the barista can't sell you more than two things. So if you just apply the principle of two, even while taking the decisions, it becomes easier, because then you're thinking about it from the lens of the store. So when it comes to capital allocation, I think when we look at opening of stores and when we budget for the model that we know will work versus how much we experiment, I think I agree with you, Sean, that you need to at least allow the leadership as well as the employees to have a certain 5-7% to learn to fail, because it's very important to demonstrate that vulnerability. So even currently, we're experimenting with a model which is, really seeing how we can penetrate with our smaller formats into housing society. So convincing your stakeholders and allocating some budgets and assuming that it will fail and allowing the team that freedom, I think it's very important. But almost 90 to 95% of whatever we do, given that, we're a low margin business, we have to be very conscious as to where we allocate our capital. So those are my 2 bits on capital allocation. I think focus of 2 is not just applicable to retail. I think across industries, even at leadership level, I don't think any one of us can really if we have to deliver meaningfully, it has to be not more than 2 or 3 things, yeah?
And just going to build on one thing Vani said, in terms of capital allocation, especially for the startups out there, one area you cannot underinvest in is technology data. You may think, oh, I can save a few rupees, let me do it in Excel sheet. It'll inevitably inhibit your growth in the very near term. As she said, I mean, retail mostly is about data, supply chain, in any aspect, whether it's high-end, low-end. I mean, Kamo shot me because I was making them do an ERP Navision implementation at 9 crore sales. Now they're like, oh my gosh. They actually see that it was painful at the point. So you can get away with Excel sheets, but remember, Walmart is not a retail company. It's a technology company. And there's some examples in the food industry the same way. So I just throw that out there to be a provocative thought.
Yeah, I think I totally agree with you because in the early days we had to decide when we started up Starbucks, we had 2 very, very prestigious parents. But when I looked at the Starbucks model, different markets were having different POS systems. And we said, whether it's $500,000, let's just put the money in the first year, get not just our POS, our ERP, but also our MIS to such a level that we are able to scale it up. And technology today, everyone knows that the cost of technology keeps coming down. So even when we started, we put everything on cloud 5 years back. And the same principles we're applying in Nature's Basket. I think investment in technology really pays off very quickly.
No, it's an investment, not a cost. It pays off so quickly.
Let me pick on that. I mean, you guys made this point earlier at the start as well about technology and people. We do a lot of work, when we help companies on performance improvement.
Yeah, what do you think, Amit? What do you tell people to do?
Well, we often get in and fix the businesses where things have, gone wrong, but we also help businesses scale up. I think one thing which does surprise us, actually, is that, we find 2 things that come out quite often. One is, I think, while people talk about technology broadly, and many people think ERP is a mantra, we find that the basics, for example, of things like, demand forecasting. How do you forecast demand as to what is required? Because that's your entire production plan. If you're a retailer, that's what you're going to order. That's a very big deal. How do you plan your entire range architecture? What products you're going to sell, what your portfolio needs to be. And very often what we find is when we go through the logic of this, because businesses are growing so fast, is that the execution has often fallen because they have not put enough thought into repeat learning, spotting patterns. How do I forecast correctly? How do I grow up? And a lot of the pains that we see on especially on working capital, whether it's inventory and things like that, you were saying distributors are having problems, you've given them the wrong product, etc. It's because of that. So, and some of them do have ERP. I'm not saying technology. So I guess one question that I have for you all, and I guess this goes across businesses, how do you kind of instill that listen, there is when we start up, we have less information, but as we grow, we're getting more and more information. So how do we use that information to forecast correctly, to build, plan correctly, so the margin of errors keep reducing as you scale up? I mean, how are you all doing that in your businesses?
I'll start if that's okay. I mean, I think at our scale businesses, typically it's a very hard conversation. They see an ERP as software, right? It's really a process overhaul. It's more of a Bain McKinsey process redesign than it is software you just install on a computer. So getting the mindset to change to see the power of what can be unleashed, because you can't talk about pattern spotting if you don't actually have common data that you can compare across something. But generally looking for learners, and I think if you find, instill in your team sort of the curiosity, the learning, and if they do that, they'll hopefully change, that actually can be quite powerful. But it takes time to change mindset.
I think I agree with Sean that when you're building out a business, I think, and a lot of you have the benefit of great training, people from different institutes start off or you have a family-run business, and you want data, right, even when you're putting in your own money. I think for me, when I look at the experience that we've had in Nature's Basket, we've really made a tremendous shift in terms of how we use data. And I think it starts with getting the right people at the leadership level and making sure that they're empowering themselves and taking decisions backed on data. And it's funny that it's not just about an MBA graduate or a chartered accountant on our leadership team who values the data. We're rolling out a process at the store level for inventory, for example, and we're using an in-house app that was developed at absolutely negligible cost. And it's unbelievable that the 18, 20, and 25-year-old store managers and a CSC who's probably 12th pass, they love using the app. So it's not just ERP, which is on a fancy computer, or a finance department or an MIS department churning out data. These guys actually like it because they understand the power that if I get, my stock visibility right, I will be able to ensure that I have the right stock and therefore meet my sales target. So I think being data-driven is an absolute must, especially if you're building out businesses. And this is so valuable to us, and we're not just seeing it from the CFO and the CEO level, but if you walk into Nature's Basket, whether it's Prabha Devi or Worley, we're actually experimenting some of these apps, and the way that people are embracing this technology is simply amazing.
Yeah, my challenge, while as a company, when we started on day one, the investors and as a promoter, we wanted to have the technology-driven company. But the challenge what I'm facing in India is the environment. When we want to digitize, you have the wherewithal, we have the mindset, we want to do it. So I went and introduced a package called Botree. Now, Botree is a front-end package. We also have an SAP. But SAP is not fully efficient if you don't have the right implementation of Botree in the front end. Now, what is Botree? It's a package which engages the distributors and engages the field force from there. So now my problem is the distributors are not willing to engage themselves with the Botree. The traditional Indian problem of unaccounted cash and accounted cash, etc. So they are quite shy of the so-called digitization or whatever we want to do, we are not able to do. So distributors are not embracing the Botree now. So we have, say, 500 distributors. In the last 2 years, after buying the package of Botree, after paying 2 crores for that, there are only 50 guys have adopted that. For a simple other reasons in India, what we face in India. Right.
I think the biggest barrier to adoption of technology, at least we are experiencing that, is that areas which have been very opaque, which have been dearth in terms of transparency, and suddenly you try and bring transparency in those areas. There is a huge fear, a mindset of getting caught, right? That's a very big barrier to adoption of technology, which is happening across the entire chain as far as CPG is concerned, because transparency brings accountability, and you're not ready to be accountable. Not because you don't want to be accountable, but because that's how you've been forever. And changing human behavior is tough. It's very tough. So there's some very simple mechanisms. So therefore, one of the advantages also with the way technology is evolving, really, it allows you to leapfrog a lot of developments which have happened over the last decade, and for you to go to a very simplified version, which is resident on your mobile phone, which essentially has to do with all kinds of app. So one of the things that we are trying to do, and as simple as a thing that frontline attendance. One of the reason in a sales and distribution company, sales don't happen or productivity doesn't happen is because the attendance itself is poor. Now, how do you measure attendance? How do you make people run away from the fear of being, caught? So, very, very simple app-based solutions on their phones actually helps you achieve a lot. It's a high risk to technology companies which vend expensive solutions, but it's an easy way of getting the job done. So, if you are a startup, and if you are anyway in the business of creation, don't necessarily be bound by legacy technologies or legacy solutions or embedded solutions being thrown at you. I think there is a lot of scope for adaptability and innovation.
I'm just conscious of time, and I'm sure there are a lot of questions in the audience. But let me go around and ask you guys. Look, this is in a way. You'd love to get the perfect regression line between scale up and efficiency, and with the benefit of hindsight, it's much easier to do it. But as you're doing you're growing your businesses, you probably realize that you've had a few things that haven't worked, mistakes you've made. I mean, I guess for the benefit of the audience, what is the sort of, I guess to get your remarks, what is the sort of hard decisions you've got to do all the time when you're scaling up? Because you do have this capital that you've got to optimize. You are scaling up. You have multiple choices. What are those and how do you do it?
I think I'm reminded of a very dear friend who taught me this when I joined Starbucks. Her name is Belinda. She leads the China market for the last 10 years. And she used to always tell all of us, learn fast, make mistakes, and make the mistakes very quickly. Because when you're scaling up and when you're very ambitious about where you want to take your organization, it's very important as the promoter or the passionate entrepreneur to not just showcase a dream and a passion for your business, but to also be very vulnerable to mistakes and failure, and to drive that into the culture. And a lot of us in the Eastern Hemisphere, and I give Belinda's example because it's not a US example, and you'll not find a lot of Eastern-based companies really talk about failures. I think you are going to fail, and you're going to fail several times. And the faster, as the head of the company, you accept that, the easier it will be for the rest of the organization to be open to experimentation and be open to scaling up very quickly. So it is definitely comes, and that is a responsibility of every head of company or an entrepreneur, whichever way you look at it. The other mistakes, I think, or difficult decisions that one has to take is, if you've made a mistake, don't be afraid of the magnitude and withdraw from it. So when we were looking at changing Nature's Basket into a daily neighborhood store from a destination shopping, we actually had to get the model right, and we had to choose in which markets we could do it successfully. So we were trying to actually scale back, and it is tough to walk away from, important markets. We did choose to walk away from Delhi. And, there was a lot of heartburn, not just at the organization level, at every level. I've been in a meeting where there were 8 store managers, and we had to tell them that we were going to close Delhi. So that's definitely, as a leader, you have to take those tough calls, but you have to be guided by why you're doing it, and you have to convincingly carry the organization with you. So learn, make a lot of mistakes, show a lot of vulnerability when you're building a young organization, because those are the moments of passion that you will remember when you're large and you're scaled up a lot. And the other is tough decisions are, it's like being a parent, and some of us are in this room at that life cycle. Being a parent means also being open to mistakes that you will make. So that's my 2 bits on scaling up.
Thank you.
I'll just throw in one around the Peter principle, which is very hard, because you'll find as you're growing, make sure, as I said earlier, please invest in your team, give them opportunity, develop them. But everyone naturally does hit sort of a ceiling, and you'll find that people that have been with you for the longest, they eventually do hit that ceiling, and then you feel an obligation, very rightly so. So how do you balance the two? To stay with them and let them stay in a certain position where they're failing, which actually is really hurting the organization. So I've seen it actually many times over the course of organizations, is sort of balancing loyalty to long-time employees versus, the Peter principle actually choking the organization. Very hard. It is not easy at all. But it's saying something I've observed, so be mindful of it.
So what do we do on a daily basis in terms of when you're scaling up? I think, and when it comes to capital, look for good costs and bad costs. Right? I always look for good costs and bad costs. Good costs for me is, a cost which I invest behind people, which I invest behind product quality, which I invest behind brand building, which I invest behind culture building. Bad cost really is for me cost which is, inefficiency, wastage in cost of goods, not being able to negotiate with your vendors, administration cost, lifestyle costs. So take costs out of the bad costs and put it behind the good costs, and you'll have a robust business.
Let me thank the panelists. Thank you for your time, and I guess we are ready for our next session.